Hello, everyone. Happy Sunday. Happy Easter to everybody. How we all doing? I get an audio check here on my end. Alrighty, should be good to go. Hope you guys are having an awesome weekend. Hope you're all having a good, again, Easter Sunday. And we're ready to get back to it for a new week of business. So with that in mind, guys, I know it was Easter Sunday. I was juggling at the beginning of the day today. Should I go live or not? But I figured since you guys are going to be trading this week, I will be as well. I might as well share my thoughts. I was thinking maybe I'll just send some screenshots into Discord and Twitter, let you guys know what key levels I'm looking at for this week. But I figured by the time I do that, I might as well just come on here live with you guys, explain to you guys what we're looking at, cover a little bit of what we saw last week, and answer the million-dollar question, right? Everyone wants to know where the stock market's going, where currencies are going, and we'll cover all those details here today. So appreciate you guys joining us. Amy, happy Easter to you. Joe, happy Easter to you, my man. Kevin, to you as well. Joe, hello everyone, new here. Happy to have you, Joe. Thanks for joining us, my man. Cleo, happy Sunday. Thanks for being with us today. Absolutely. Apologize for getting here a few minutes late after we got done at the breakfast, lunch, whatever you want to call it. They had quite a few animals out there, rabbits, baby chickens, and baby ducks. So I was with my girlfriend, so that's why we were there a few minutes. I haven't even had a chance to look at the charts today, so I will be looking at them for the first time here with you guys, let you guys know what I'm weighing out and what we're expecting going into the new week here, ready just to roll off the cuff. So with that being said, let's go get into what we're looking at here for today. May take a few questions at the end, but looking to keep this one short and sweet. I got quite a bit to do here today ahead of the new week. So with that in mind, I want you guys to take note of what I'm mentioning here, but more importantly, understand why we're here, right? Why are we here on Sunday? Why do we come here on Sundays and get prepared ahead of the new week? Because what you're doing is you're giving yourself an advantage. You're putting yourself ahead against those who have no preparation, right? They have no professional mindset, no routine behind what they're doing, and they're just showing up Monday morning ready to gamble away their money, right? There's a better way to go about it, which is having a routine, a process as to what you're looking at, understanding why you're looking at these things so that you can prepare in the best way possible for the new week, right? So that's why we're here. We're here getting locked in and getting ready for the new week. Also, one other thing I'll mention before we get into it as well, it's very nice speaking with many of you guys in the community. Actually, before I actually started doing those one-on-one consultations, I was, and for free, by the way, I'll mention that. I was thinking in the back of my mind, I was like, man, do I want to, spend all these afternoons, with people, which obviously, of course, I want to, but, I have to balance out all the other things I'm having to do as well. And for all the value that's being given, and I was speaking with my girlfriend and one of my other business partners, as to, should I do that? And, I was thinking, I was like, and then, throughout that conversation, I realized if it's something that I'm concerned giving out because of all the value, then it's probably just the right thing to give out. And after speaking with so many of you guys, seeing your why as to why you're here being a trader, right? Why this means something to you, and being able to speak with you guys, give you guys clarity that many of you guys probably would have never had, and unfortunately continue struggling for weeks, months, and years down the road because you don't have a real process and a real framework for what you're doing. So it's been my absolute pleasure to speak with you guys, give you guys that clarity and work with you all. And I'm looking forward to speaking with many more of you guys here in the future. Hey, Samad, happy Sunday to you, my man. RJ, locked and loaded. Let's get down to the business, guys. All right, so let's look at the weekly chart here. I'm looking at NASDAQ. Let's start with the US dollar. So we had major targets delivered, not last week, but the week before on the US dollar, right? These relatively equal lows here delivered beautifully. As I was covering with you guys last week, I wasn't bullish or bearish on dollar. Right, and then the reason being, as I covered last week, I'll restate this again here, is once we reach major targets like this, right, relatively equal lows on a weekly chart, monthly chart, this is a key higher time frame level. Once a higher time frame objective is reached like that, as I mentioned last week, we become neutral. Reason being is because once a major expansion occurs into targets, what's the market more likely to do? Consolidate. And if you look at the previous weekly candle here, what did it do? It didn't take out the previous candle's high or the previous candle's low, meaning it was an inside week. How can you predict that? Well, we've already reached targets. And then if you look at the economic calendar, this previous week was a shortened week with no trading on Friday being a bank holiday. So now we have what? Bank holiday, large range expansion into targets already happened. And what you'll study going forward is these shortened weeks, weeks with bank holidays, are generally consolidation weeks. So that's why last week we covered, I don't have a lot of expectations on this market. We're going to see how we trade here. What do I mean by that? Well, we reached a key level, right, which is the sell side liquidity here, or in other words, the sell stops that's below this low here and these lows here, right? So major targets delivered. What I'm watching is how we trade from this level, right? So do we continue accelerating and really break into the downside? Or was this a run on liquidity to now start to work higher back into this range we've created, right? Those are all things I'm measuring and determining. But as I said, these big price runs take time to develop, right? So it's not just big price run. All right, Dylan, give me another price run and I can just tell you where it's going, right? These big price runs take time to develop. You have to be patient. You have to wait for them. So what I'm waiting for again here is seeing how we trade below these lows. And that's going to give me a great deal of insight as to what I want to see going forward. And then you can really see this as well on the hourly chart, right? So for those that were really pushing hard last week with either a lot of leverage or a lot of trade frequency, getting absolutely fucking smoked, right? So you have to know what you're looking for and why. And then you see once we reached these targets last week, Friday, which is this red line here, what did the market do, right? Sideways. Are there scalps in here? Are there, short-term opportunities? Absolutely. But if you don't know how to control yourself, if you don't know how to determine these consolidation weeks here, and you're trading your same amount of leverage, your same amount of trade frequency in these market conditions, you're probably going to struggle, right? And I understand that everyone has different strategies, right? Some people are scalpers, so you can still trade and scalp these conditions. I'm not saying that's not the case. However, if you're looking for big range expansions, right? If you're not understanding that it is a consolidation, which is also very similar to what we saw in the NASDAQ last week, right? Consolidation range bound market, right? So many people had a difficult week last week, right? And it wasn't even the easiest for myself, but I did manage it well according to my protocols, which is sizing down and reducing my trade frequency when I expect this type of market profile here, right? So these things can be anticipated, requires a little more study and knowing what you're looking for. Like I said, we did cover it last week, but again, these are things you can start noting and journaling, because if you did struggle last week, how do you think I learned to take it more easy on these weeks? Getting my ass absolutely handed to me. And over a time of doing that, you journal, you reflect, wow, what caused this week to deliver like this? Okay, it's a shortened week, so there's probably not a lot of fund level order flow coming into the market on these shortened holiday weeks. So when you start to put two and two together and you review what you're doing, you're going to see there's a common theme in the weeks you're getting smoked. And really the process of becoming profitable is learning how to get smoked less and less and less until you're the one doing the smoking, right? Let's go back up to that daily chart and cover what we're looking at here. So on the weekly, we covered these lows here being taken out. Now we're seeing how we trade there, right? And then we saw on the daily candle, or the daily chart rather, the daily candles again, just overlapping in price action, not really going anywhere, right? Which is again to be expected after huge ranges are delivered, which this market maker sell model we were looking for nicely completed here. So again, still seeing how we trade below these levels. We're still consolidating. So I'm going to allow the next week to highlight that to me. We have clean lows down here, right? So looking at the hourly chart, we still have clean lows down here, right? And if we look at the daily here, order flow is still technically bearish, right? So I'm a firm believer in when you see a large trending market like this, I'm generally not trying to call a bottom in something like this. So I have a soft bearish bias, but it's not a firm bias because again, we've already reached several key targets. So if the market is going to turn, it'll be very similar to what we saw up here, right? When the market's bullish, trade it bullishly until it confirms it's weak by breaking down through the market structure and shifting order flow, right? Then when you get that insight, you'll be able to pivot and see the true direction of the market. So again, as of right now, I want to see how we trade below these lows here, right? That'll give us a great deal of clarity on the other currency pairs moving forward. If we go up to the monthly here real quick. These lows are critical as well, because if you look at the higher time frame monthly dealing range that we're trading in from this low to this high, we've also traded into a discount market as well, right? So equal lows taken out inside of a discount, that's going to be very important to monitor going forward. All right, and then last thing I wanted to touch on as well, as I did cover, it was a difficult week, and part of that learning process, the way you can accelerate your learning curve, right, and learn is basically what I just mentioned. Samad, get smoked less and less until you're doing this smoking. There you go. Absolutely, right? And that's the process of becoming profitable. But if you have a negative relationship with losing, meaning you take a losing trade and you get angry, or you think the market's out to get you, or you start getting upset, you start thinking negative of yourself, you start thinking, man, another losing trade, I'm never going to get this. The reason you're not consistent is because you have that mindset. If you look at your losing trades as a learning opportunity, like, okay, for example, I use this fair value gap and I picked the wrong fair value gap. Well, instead of going in your journal, and bitching and moaning about, oh, I picked the wrong fair value gap, this sucks, I'm never going to work. No, look at the higher time frame. What was it actually reaching for? And then you can see, okay, the hourly and daily chart was reaching higher. So why am I using a bearish fair value gap, right? And then now the next time that's going to show you, reference your higher time frame. And then now you don't take those losses, right? So that's the process of getting to consistently profitable, but you're not going to get through those losers, right? And you can't sweep them under the rug. You have to take those losers, see what's happening there, review it, and then not make those same mistakes in the future, right? And unfortunately, many people learn with live funds, which is the worst way to do it, right? The reason trading is probably so stressful for you, right? You're probably having such a hard time mentally, emotionally, psychologically, is because most of you are doing exactly what I did, right? Trying to learn with live funds, making it stressful, more difficult, and frustrating. And unfortunately, there's a better way to do it, in my opinion, which is learning the skill set first, right? And not putting yourself in a difficult situation financially. Then once you prove to yourself in a demo account that you know what you're doing, then put your live funds behind it, right? And start little by little by little. So hopefully that's going to save some of you guys and spare some of you guys the misery that I've gone through, that unfortunately many I've spoken to gone through, which is absolutely getting your ass handed to you, putting yourself in a difficult situation financially because you're doing something you're not ready to do, right? And again, while what I'm talking about here, it's not flashy, it's not sexy, but it'll probably save you a whole lot of money and a whole lot of time, because there's nothing worse for me than speaking with people that have been doing this 4 years, 5 years, 8 years, 10 years, and you're still on the hamster wheel making no progress. And that can stop when you shift your mindset to start focusing on the right things and not rushing the money. And so if there's one thing you take away from that here, it's hopefully that today. And obviously the analysis is just the bonus round, but those are the two main things I wanted to touch on here today, because last week was difficult. And I know, 2, 3, 4 years ago myself, not as equipped as I am now, I may have made some poor decisions in market conditions like we had last week. There's a right way to do it, and hopefully you guys are getting that from what I'm sharing here. So that's what we're looking at on the US dollar. Like I said, we do have these equal lows and equal highs, so we are kind of in a consolidation range. So we'll see what side the market runs to first, and then that should also give us some insight here going into the new week. So touching on the bond market, right, to confirm what we're looking at in the US dollar. Let me zoom in. All right. So weekly chart, we have the up close candle here, bearish order block that we've not traded into. I want to see how we trade there. So what you can do is extend this opening price through, and I'm going to watch how we trade inside this up close candle. If we're going to be bearish and continue lower, I want to see the market accumulate shorts and see the market rotate to the downside inside this up close candle, right? Trading up through that is no good. And in an ideal world, right, if we're going to see clean price action to the downside, we'll see the market stay in the lower half of that order block as well. So we don't want to see it pierce the mean threshold, right, the 50%. Daily chart here. We had a nice displacement range here to the downside last week. And this week we just worked up into it, right? So from this high to this low, that set the range, and the market's trading back up into that. And again, we want to see how we trade inside that weekly bearish order block for longer term directional clarity. All right, watching this SMT here as well. So we have a higher time frame key level, right, which is that weekly bearish order block. And I've already covered that, I think not last week, but 2 weeks ago, how to use SMT divergence. So we have a SMT here, right, inside of that key weekly bearish order block. So what I'm watching, if this SMT holds, then that would be very supportive of lower prices for bonds, which would also be bullish for US dollar. Let's allergies. So again, as long as the SMT holds, that will be bullish for US dollar, because that will send the bond market higher. So watch that SMT there, see if it holds. And again, watch that weekly up close candle bearish order block. Again, that'll give a great deal of insight as to where we're going to trade moving forward. One thing as well that I'll touch on here is this monthly chart. Bonds have been inside of a range here for a while on the monthly chart, so do be mindful of that. If order flow does remain bearish, we do see bonds are in a higher time frame sell program. So we'll watch how we trade here inside this range, but those are the higher time frame key levels I'm watching on the weekly and the daily chart respectively. All right, so working into the NASDAQ, so very similar to what I covered in the US dollar, about it being an inside week, very similar to what we're seeing here in NASDAQ, right? If we look at the previous weekly candle, the high and the low were not violated, meaning we had an inside week on the previous bar. So this is generally going to signal a consolidation and more difficult price action, right? Not impossible, right? Still, you can go in there, frame setups, get what you're looking for. It's just these weeks are going to be slightly more difficult. And I shared with you guys how you're able to see that within the context of the economic calendar, right? When there's a bank holiday, there's not going to be as much fund level order flow going through the market. So the market's not going to move a whole lot because there's not a lot of people that are wanting to take big risks ahead of a long weekend like we're in right now, right? So with that in mind, looking at where we're at on the higher time frame here, we've seen a retracement here into this mitigation block here. And that's what I'm watching, right? As long as we remain below this last down close candle here, I want to see us continue working lower, right? We have this low here. And then this low back here, right? So higher time frame perspective is still bearish as long as we remain below this down close candle here. So as long as we remain below that down close candle, we're looking for lower prices. What changes my higher time frame perspective, right? Like what would make me consider these equal highs and for the market to want to return to a premium of this range? If we get through this mitigation block here and we start to show bullish price action on like the hourly and the 4-hour and the daily chart, then that could support a run into these highs. But as of right now, again, I'm not trying to call a bottom in a bearish market. Going up to the daily, or sorry, down to the daily chart here. So covered what we're looking for here on the weekly chart. Now let's look at what we have in the market structure on the daily. So we have a dealing range from this high down to this low. And then the market's traded up here into a premium market. This daily candle here, absolutely insane. Ended up being what? A 2,600 point, 15% daily candle. Absolutely incredible. Looking at that, many people would think that's really bullish, right? Seeing a big up close candle like that. But let me remind you that the biggest up days in the market occurred in bear markets, right? Like if you look at the 2008 crash, one of the biggest days happened in 2008. And I'm of the opinion that what that's designed to do is sucker in retail to want to buy the market, right? A market that's clearly bearish. I personally, when the order flow is bearish like this, every rally is a means of fading, right? So this rally here, faded. A rally here into these key levels, faded. A rally here into a premium, faded. And that's essentially what I'm looking to do when the higher time frame is bearish. When the order flow shifts bullish, again, I'll gladly shift my analysis, but as of right now, I'm not looking to call a bottom in a bearish market. So I see this as the market's trading up into a premium. We hit these two up close candles, bearish order block, as well as the breaker here. Right, so we hit the, let's make that gray. So we worked the low end of that breaker there. You'll see that beautifully. And then we're starting to work lower from here now. So if we're going to be bearish, we do not want to see the market trade back above this high here because this high here rebalances this entire inefficiency. So ideally, if we are going to continue lower, we'll see the market trade away from a premium of this range aggressively. That's a signature I want to see. If I'm bearish and the market trades into a premium, it should show me decisively it's weak. So as long as we continue to accelerate to the downside from there, we'll look for the lowest body here, 50% of the wick, sell side here below this low at the 16,460, and then we could see the 1500s on the NASDAQ if we continue to accelerate. What would change this perspective is if we remain supported inside this down close candle and we start to see bullish price action. But I'll cover that and update you guys if and when we see that. All right, so covered what I'm looking at on the daily. All right, let's go to the hourly chart here. So just brief recap of last week. We have range low here and a range high. So between Wednesday and Thursday of the previous week, we just stayed inside that range, right? Working the upper half and then the lower half. Why can that be expected? Well, that goes back to what we covered on the weekly chart, right? Top-down analysis. We had an inside week. It didn't go anywhere. It's not reaching for the previous candle's high or the previous candle's low. If you look at the daily chart, Monday, Tuesday, Wednesday, Thursday, just staying inside this range here. And then if you look at the hourly candlestick, consolidation range here, right? Working inside this range. We didn't break the high or the low. That's signaling we're in a consolidation market. From my experience, these are generally one of the more difficult market conditions for my style of trading. So generally when I see this or when I anticipate it, I generally reduce my trade frequency and reduce my leverage. One of the biggest benefits that I've seen that really profitable traders have, as opposed to those that aren't that consistent, is knowing how to adapt your risk, right? Knowing when to push more and knowing when to play more defense, right? Because if the market conditions are not good for your trading strategy and what you're looking for, you have to be able to recognize that and size accordingly. And then when things are what you're looking for, right? Higher time frame expansions, the daily chart, the weekly chart is reaching the obvious levels and it's easy to see it. Those are weeks where it's probably wiser to maybe push a little more, right? Not over leverage, not do anything reckless, but be a bit more aggressive, right? Trade more often, trade more setups. But it depends on the market conditions, because if you push a lot in a week like this, you're absolutely getting smoked, right? So you have to be able to learn the difference in market conditions and how the market shifts in and out of higher time frame expansions to higher time frame consolidation markets, right? And that's exactly what we had here this past week. So with that in mind, what I will be watching going forward, we're still inside this range here. So let's go back up to the 4-hour chart. So we do have clean highs and clean lows. So that does make it slightly more difficult for me to predict the immediate draw. But what I'm watching here is this up close candle. Treat that as a a bullish breaker. We hit it once, twice. I want to see, do we find support there? If we do, that could take us into the buy side here. If we work down through that though, then treat this level like as an inversion gap, and then it'll use it as resistance, and then we can see a run into these lows here. So I know right now that can seem like Dylan, you're calling both sides of the market. Very rarely do I ever do that, but I'm just weighing out the scenarios that we could see. Again, when we're in a consolidation market profile, things are slightly more difficult. So I have to take it day by day, candle by candle, until we leave this range. So that's essentially what I'm looking for. And in summary, the cleaner price action is going to happen once we trade outside of this range high or outside of this range low, and we engage one side of the liquidity. So when are you going to return to more trade frequency and your normal trading leverage, Dylan? I'm going to do that once the market shows a decisive repricing out of this range, either to the upside or the downside. As traders, we don't care higher or lower, as long as we can see where that market is likely drawing to. So that's the business there for indices, NASDAQ, S&P, and Dow, all going to be the same thing. And don't want to miss any other markets. Crude oil. All right, so if you look at crude oil here on the monthly chart, we've been in a sideways consolidation for a long time, right? A real long time for crude oil. I am happy to see that we're now starting to leave this range, right? So we've traded this range to the downside, and we ran out the sell side liquidity here. What I'm watching, right, for crude oil, what I want to see going forward is how we trade below these lows here, right? So if we start to see a rejection to the upside and we start to see bullishness in crude oil, then we could see these equal highs and really see the market start to work higher. Because the market's been in a consolidation for a long time, again, that's like a spring that's being compacted. So when it finally expands, it's likely going to be a large range expansion. So now that we've taken out one side of the range and we work down into the weekly chart, I'm watching this fair value gap here. Right? I'm not certain that this fair value gap is going to be a sell-off, right? Because we could trade to it and through it and start to see the market work into the buy side here. So what I'm watching is how we trade inside this fair value gap here. And what I will study specifically, so you guys know exactly what I'm going to be looking for, is the market structure that we build in here, right? So do we see a run on stops, a breakdown in the market structure, shift in order flow, and see the market start to work lower? Or do we see signs that order flow is going to remain bullish and we're going to keep trading higher through that gap? So that's what I'm going to be watching on the hourly chart to the 4-hour chart inside of this weekly key level here, because I'm looking for some big moves in the commodity markets. And if I am going to look for a big move in crude oil to the upside, right, for just a face-ripping rally, then we want to see the market do what first? A drop, right? So whenever I'm looking for bullishness, what sets the stage for it is the market running into sell side or trading into a discount of a dealing range. If I'm looking for lower prices, what would set the stage for a bearish move would be buy stops taken out or the market trading into a premium of a dealing range, right? Very simple things I look for, very generic things of price action that repeat every single day that I'm in there looking for. So that's what I'm watching here in the crude oil markets as well. All right, we touched on corn last week, so we will see how we trade inside this fair value gap here. No action on commodities yet for me, just observing still, getting a feel for what they want to do on the higher time frame. And yeah, so I'll go ahead and leave it at that. Touched on crude oil, Bitcoin. Let me see. Yeah, Bitcoin's still asleep in that range. Is why I don't really like to trade or call Bitcoin, because it sucks. Other than long-term investing, in my opinion, there's a lot better assets to trade than crypto. But Eslam, can you take a look at Ethereum? Yeah, absolutely. Abraham, happy Easter to everyone. Yeah, happy Easter to you, my man. Hope you're doing awesome. So Ethereum, taking it from the monthly chart, still have the same biased outlook on cryptocurrency. All right, order flow still bearish on that monthly chart. We did reach a key level though, right? We did reach the sell side here, but now the next draw is down here for Ethereum. Monthly chart still very bearish, nothing bullish. Weekly chart still seeing bearish order flow, right? Market breaking down, inefficiencies, right? Being respected. We have this inversion fair value gap. Whoops. Right, inversion fair value gap, close below it, come up, use it as resistance, can't hit the midpoint, market sinks to the downside. So order flow still bearish on the monthly, the weekly, and then now we're finding it to the daily. I still see this as a clear sell program. So I'm not going to call a bottom in a bearish market. You guys know my stance on that, because imagine being the person that's trying to call a bottom on all these swing lows, trying to call a bottom, smoked, trying to call a bottom, smoked, and just keep getting smoked, right? So it's much easier to just trade the order flow. And then when the order flow shifts, it's going to tell you. So that's my opinion on cryptocurrency. Still looking for lower prices. But sorry, just saw something that distracted me. So keep looking for lower prices. I'm not bullish on cryptocurrency at all until something starts to print clear bullish order flow. And as of right now, that is not the case. Bitcoin is holding up better than Ethereum though. So that's also a benefit of relative strength analysis. If you are trading cryptocurrency or investing in it, I know many of you guys short, long cryptocurrency through many of these exchanges. It pays to know relative strength analysis, right? Because if you've been shorting Bitcoin, sure, I mean, there's been a drop, but shorting Ethereum, much weaker, right? So you're able to use that insight to pick the better assets for your trading, for your investing, whatever the case may be. So yeah, Eslam, that's Ethereum. Amy, unfortunately, I missed the beginning, but is QnA market maker model? So the way I look at it is every single price run is a market maker model, right? So looking at the weekly chart here, using the logic of the buy side of the curve with, well, I also don't know how detailed we understand market maker models, because everyone has a different understanding I've seen. The best way to understand market maker models is the actual logic behind institutional order flow inside of price delivery. That may seem like a really big word, like I'm saying a lot of things, but if you understand what a bullish order block means, right? Like these two down close candles, that's a bullish order block. Okay, everyone's able to see that. Of course, everyone's able to see that's an order block done, right? It's two down close candles, the market traded into it, found support and traded higher. Well, if this is a bullish order block on the buy side of the curve and smart money's capitalizing on these down close candles and going long, well, then they're going to use these same levels on the sell side of the curve. And then they're going to recapitalize on these same ranges. So they did what here? Went long inside these down close candles. So when it's trading back down through it and it's acting not as a bullish order block, but as a bearish mitigation block, what's happening there? They're mitigating long orders and using this range to recapitalize on and short inside this range. So market maker models are much more about understanding the framework as to how price action is delivered and how institutionally minded traders look at price delivery. And it's a lot less about like 3 random boxes on a chart, you know, and that simple example is helpful to understand market maker models, but there's a more detailed framework behind it that if you understand it, you're going to be able to see market maker models in every single price swing, inversion fair value gaps, mitigation blocks, and understanding how the left side of the curve is going to match with the right side of the curve. And that requires a little bit more understanding. But when all that comes together, you're able to see that it's not a matter of, is this price swing a market maker model? Actually, every price swing in and of itself is a market maker model. So hopefully that's helpful. Hopefully that didn't confuse you more than when you came, but hopefully that gave you some clarity as to kind of how I look at market maker models and how they're used in every single price swing in price action. Absolutely. Then hit the like button. Very much appreciated. Please do. Thank you guys very much. All right, guys, so that's going to be it for me here today. Shared what I'm looking for. Hopefully that's insightful for what we're expecting here in the new week. any updates, because I know I am neutral on a couple assets, any updates that I do see, I will let you guys know as soon as price action starts to give me the clarity that we need to start framing one side of the market in a high probability way. So with that being said, guys, stay safe, take care. The recording will be up. I know it is Easter. Many of you guys are either with family, at church processions and whatnot. So the recording as always will be up. I want to keep this one short and sweet. Getting out of here in about under 30 minutes. That was my goal. So with that being said, guys, take care. Have a phenomenal rest of your weekend. I'll see you guys on the next one. See you, everyone.